This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 200, is brought to us by Bybit. What a perfect sponsor for episode 200. I've been with them for years now. I can't think of any complaints apart from that they don't take Americans. And by the way, I do have an option for Americans down below in the show notes. But they have been awesome. They have treated you guys awesome. You get almost every option you could possibly want. You get giveaways, airdrops. Don't forget, one of my traders signed up for a raffle and won 2 whole Bitcoin. So $170,000 worth of Bitcoin just for signing up, being an active trader, and taking action. This wouldn't have happened anywhere else, because for over 3 years now, my traders understand with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and I did a little back-of-the-napkin math today. I'm like, all right, 200 episodes divided by 52 weeks in a year. Holy shit. I've been doing this podcast for almost 4 years. It doesn't feel like 4 years. I remember almost 4 years ago, I came out with a cocky tweet saying, you know what? I was really good at podcasting. I need to do another one. And so all I really did was take the same methodology, the same contrarian thinking and technical analysis that made me a professional Forex trader, and just carry it over to the way I invest, because it was working really well for me there too, and I thought I would share that with anybody who was interested. And almost 4 years later, here we are. And it's been such a great experience, because unlike the Forex trading content, the majority of you are here for the right reasons. What I learned back in 2018 and 2019, and I learned the hard way, was that most Forex traders are dumb and lazy. And as soon as they found out there's actual work involved, a lot of them lost interest. To where with this investing podcast, of course my audience is smaller, but it's so much better because the majority of you guys get it. You understand what's going on here. You see the value in it. And those of you who have been with me here for a long time understand just how well it works. I mean, we've been prepping for a huge economic downturn on this podcast ever since it started, yet we have still made a lot of money in the process. And that's a really good feeling, to be covered in case of the worst case scenarios, yet still be profitable all the while. So far, mission accomplished there. But this is really my way of saying thank you to all of you. Very much unlike back when I was putting my Forex trading material up, you guys have made this whole experience so much better, so much more rewarding, and it has compelled me to want to do another 200 episodes after this. So here's to that, and thank you all. But getting into the episode, we are talking about real-world assets today, and I think this is a perfect topic for episode 200 because this really encapsulates a lot of what we talk about here. At the very beginning of the show, I say we dive into the world of contrarian investing and alternative finance. And I don't think there's anything else in the world which better encapsulates alternative finance than real-world assets. But I've also been waiting a long time to get to this episode, and we'll talk about why in a moment. But recently, I've kept things fairly topical, like we kind of talk about what's going on in the moment. But we're going to go back a little bit to what we kind of used to do. We talk about opportunities when price is cheap. Now, sometimes I will talk about things when price is higher and probably near the top of a market, but I won't make recommendations then. I only make recommendations, and I only get excited about things, and I try to share that excitement with you when the price has gone down. There's not a whole lot of people online talking about RWAs right now. Crypto itself is not even a really hot topic right now. And that is perfect. All the people, who were calling me and had all these questions about Bitcoin back when it was at 110, they have not called me ever since. Now that all this stuff is on sale, they don't seem to care anymore. It's like that meme where everybody lines up for $110,000 Bitcoin, but there's no line for $85,000 Bitcoin. That's just how people are. And I think deep down in your heads, that's how a lot of you are. Still, you shouldn't be. You should buy when things are cheap. But even though now things are cheap, there are still a bunch of reasons floating around in your heads as to why you shouldn't buy. Well, I got news for you, contrarians. When prices are down, guess what? There's always going to be a lot of reasons not to buy. That's why they're called bottoms. Not only is price at a bottom, but sentiment is down there too. And everybody's biggest concern is that we're not actually at a bottom. And you could very well be right. But we'll talk about what to do about that later on in the show. We are still and always will be a solutions-based podcast, have no fear. But for anybody who is newer to the podcast, please understand the methodology here. We like to buy things when they are cheap, and that involves buying things when it doesn't feel good to buy things. If you feel that pit in your stomach every time you hit the buy button, then you're probably doing it right. Conversely, if you have a boner every time you hit the buy button, you are probably doing it wrong and you are buying at or near a top. So just remember that when you hear episodes like this. I like talking about things when nobody else is. I like talking about it when sentiment is down. And I'm okay with having my numbers go down when I do this because I know the people who are listening and the people who are interested are the real ones. Now, speaking of real world assets, that is tough for a lot of people to say. I always had a really hard time saying things like rear wheel drive. I would say rear wheel drive. For what it's worth, a little broadcasting trick, if you just keep your lips puckered when you say real world assets or rear wheel drive, it becomes a bit easier. But these things are going to be in the news a lot, so I would get used to saying it. Because what this really is the tokenization of damn near everything that can be considered an asset. So a title on a home, a lot of contracts out there, the entire stock market, we'll talk about that in a moment, fractional ownership of artwork or land can all be made a lot easier, a lot more efficient, and a lot more airtight when you have this contract or this deal on the blockchain, where it will remain forever. It is immutable, and people are starting to figure this out, and the right people are starting to figure this out. But before we get into that part, I want to start with the bear cases. And like I said, I think this whole thing is inevitable. If not this, then what? Like, what is the competition here? This is clearly a more efficient and better way to do things. And there are obstacles, no doubt. But there is really nothing preventing, in my opinion, real-world assets from becoming the way that everybody does pretty much everything in the financial world. And not just the financial world, so many other things that we haven't even thought of yet. But if I had to state a bear case, and this bear case does not apply to some of you because a lot of you, again, you get it. You understand that being too early is fine. We've been too early to a lot of things, but eventually they do pay us off. This is why you spend money that you can afford to lose. Even though if you should ever need that money for an emergency, you can easily sell these assets, use the money, and then come back and buy it another time. The risk here isn't quite what you think it is. It can be, but in most cases you can just, people think like this money is stuck over on the other side forever. You can easily pull it back to your side if needed. This is why I rarely ever have a problem putting my money towards investments, because I know should I ever need that money, I can just go grab it. All I did was move it from one side of the ledger to the other, and it is not stuck there. It is very liquid, especially when it comes to things on the blockchain. But, back, of course, when the market was in a bull cycle, I got a lot of people asking me about RWAs and why I haven't done an episode on it. And I said, look, man, we are not close to having these things even somewhat implemented into the financial system and into our daily lives. These things not only take a long time to build, but then probably take an equal amount of time to implement. All right, we are, I told people at the time, I was like, we're probably 2 cycles away minimum. And in that time, so we're talking like years here, a lot can happen. a lot of companies can come to the surface. Politics can change. That could be something. I don't think it's very probable. Like, even if this administration switches over to, in the United States, switches over to a Democratic administration, they have learned that going against crypto is a really, really bad idea, a very unpopular idea across the board. And really, guys, I was saying this too, like nobody understood. The whole reason they were going after crypto in the United States was not to kill it. It was to buy time. The big banks were slow to crypto. They did not want to lose their edge. They understood, just like most of us did, that it is the future. Blockchain is the future of finance and financial payments and computing and all of that. They knew. They weren't stupid. But they needed to buy time so they could catch up too. And for all intents and purposes, it worked. But, mark my words on this, this is going to take a while. These banks have hundreds of years of history on the line in some cases, and all the reputation they have worked really hard to build, and things are going really well for them. There's no reason to completely overturn what's going on right now. In the banking system, as slow and inefficient as it is, that's what most people, especially older people with money, are just used to. So yes, there is some urgency, and I'll talk about that in a moment, but there's no reason to absolutely scramble into this and risk making a very, very big mistake, which can undo a lot of goodwill and a lot of trust, which is the most important thing when it comes to banking, that these institutions have garnered over the years. So they're going to make sure this shit is right and ready to go. And you have to ask yourself, how long does that really take? Have we learned nothing with these projects and these blockchains and these companies, that they don't just pop up like a taco stand and are ready to go? They take time, way more time than we would like. And the only real solution is just to get in early, be patient, and wait it out. But I would say we're still 2 cycles away, at minimum, in my opinion. Think about it too. We've talked about this on the show a couple times, and I have tried to stress the importance of this. I don't see anybody else talking about it, as usual. We are going to need digital identification first, in my opinion, before we're able to use real-world assets the way we expect to. I've heard people say, oh, it's great. People from all around the world will be able to invest in the American stock market now. No, they won't. Absolutely not. And if anybody does, we're going to have to know exactly who you are. We have to do this already. Charles Schwab knows pretty much everything about me, and there is a reason for that. That is my main investing platform. Do you really think people are going to allow anonymous buying and selling groups to enter the stock market and the futures market in the United States and be able to do whatever they want and be able to manipulate American companies as they choose? And the same can be said for the UK and Australia and places like that, probably even more so there, because these companies would likely have smaller market caps and therefore be easier to manipulate. Do you want to turn the stock market into the meme coin casino? I don't think you do. I know some people are anti-regulation, but regulation exists for a reason. Sometimes it's good, and this is one of those cases. But digital identification, which almost nobody is talking about, is going to have to come first. And there will have to be multiple iterations of it because, as always, the first generation is usually not going to be the answer. So all that being said, how long is that going to take? Look, I could be wrong. With timing, everybody's wrong. I've been wrong before. But somebody out there, craft me a situation where any of this stuff is coming in the next 2 years, especially with the understanding that digital IDs have to come first. Digital IDs, by the way, I think are going to be a really big opportunity once we figure out who is coming out ahead in this space, which we really don't have that information at all yet. There's some blockchains out there toying around with it, but we don't have anything concrete here. I would almost prefer that it came from a separate standalone company so you could have one ID that would give you access to everything and everywhere. But as we also know, that cross-compatibility is really hard to create. Crypto, blockchain itself has been around, for just over 10 years. How much of that do we have right now? We barely have any. So bottom line, it's cool to think up and dream about a future where this is going to be the case. And I think that is the future. But you really have to be honest with yourself and ask yourself, how far away are we realistically from this happening? And also remembering, too, that the crypto world, and especially the crypto broadcasting and social media world, never seems to be able to think in realistic terms. So you can't be looking to them for answers, because they're almost always going to sit there and tell you it's right around the corner because they have clicks and likes that they heavily depend on. And telling you this is like at least 3 or 4 years away is not going to achieve that, even though telling you it's right around the corner is certainly not in your best interest. So just remember this going forward. Understand there is a reason why I waited 200 episodes to tell you about these things. And maybe 200 episodes from now, we'll finally see some real materialization. But hopefully sooner than that. Technology does move fast and only gets faster over time. So as far as a timeline goes, there is some hope there. But now after hearing all of this from me, I think the natural reaction for most people is going to be, well, there's no point in investing in anything RWA related now, if it's just going to be 3 or 4 years down the line before we see anything. Wrong. You can be too early to something and still make a lot of money. I publicly bought Ethereum when it was at $280. Flash forward to 5 years from now, people aren't really using Ethereum the way we expected them to, and it's not really making a lot of money. If any, it's probably still losing money, as most crypto companies are. But let's just say I'm really, really glad I invested in it when it was at $280. And I've already taken some profit, set stop loss to break even, and we're going to see where it goes. And unlike things which you could argue was probably not a good idea to invest in too early, something like the metaverse and Web3 gaming, I've said many times on this show that for a number of reasons I do not regret getting in as early as I did. But just from a pure numbers standpoint, if you want to make that argument, you can. Things like the metaverse and Web3 gaming are no longer in the narrative cycle. Once they exited for years, and I have faith it will come back, but unless people are making jokes about it, then it's just not part of the narrative cycle. To where with RWAs, I think, even though we could be 3 or 4 years away from really having these things implemented and doing what they're intended to do, people are going to be talking about them the entire time. At least the media ecosystems that I pay attention to, and probably a lot of you pay attention to as well. And why is this? This really leads into my bull cases. The financial world wants this, and they want it badly. There are very slow, old institutions, mainly clearinghouses. God, I don't know what you know about clearinghouses, but they probably have made quadrillions of dollars over the years. They're the ones getting screwed, and they're the ones who are going to fight. But believe me, financial institutions want better, quicker ways to do things for a couple reasons. One, it makes them a lot more money. Two, even if they don't really want to do it, their competition is doing it, and nobody wants to end up as the inferior product going forward, or have a situation where their competition is making a lot more money. Nobody wants to become the next Blockbuster Video here. So even if I'm like, I really don't want to change this system that's been working so well for me for so long into this newer system, even though I know it's better, if my competitors are doing it, then that's going to be enough to scare me into doing it too. And who in the United States has been at the forefront of this revolution, this new innovation? Larry Fink of BlackRock, who, by the way, is not all of a sudden your friend. The crypto market is very fickle. They get behind anybody who gets behind them, and they never really ask questions about that. Like we talked about this with Kathy Wood last week. A lot of the blockchain world is now rah-rah Larry Fink, who some people have argued was actual Satan. But what we cannot deny is the level of influence he and BlackRock has on the financial market. This is BlackRock, for Christ's sakes. They have the biggest edge in the financial world, and they don't want to lose it. And they are putting the rest of the financial world on notice by saying, hey, look, we're going to be at the forefront of this. And unless the rest of you want to keep eating our ass for the next 50 years, you better get on board with it too. And so a lot of these institutions who didn't have a whole lot of motivation to make this change, now, because of what I just got done talking about, their competition is doing it, now they have no choice. We are going to see an evolve or die scenario play out in the next 3 to 5 years here with RWAs. Because wrapping up what I've been saying, 1, it's inevitable. There is no competition. 2, it is simply a better, cheaper, faster, superior way of doing things. And technologies like this, historically, always end up winning in the long run. 3, at least in the United States, which, as we said on this podcast before, is a big deal. It's the biggest deal. Anything that was stifling this technology and getting in its way is now gone. It is all green lights. How soon we forget. And all of this is exactly what we have been waiting for here on the channel when it comes to the blockchain and crypto in general. It wasn't just the plebes getting together and all of a sudden turning into libertarians overnight and using it for themselves. No, the big win here, and we said it ever since the beginning of this podcast, is we need institutions to come in and start using it. That's where the real money is. Having every citizen in, let's say, a country as big as Poland, for example, switching over and using the blockchain for their daily transactions is probably not anywhere near as significant as one medium to large financial services company in the United States deciding to use it. Look, I mean, this is just reality. This is just numbers. I don't make the rules here. But the important thing is all these restrictions are gone now. It is obviously the way of the future, and we have the opportunity to get in quite early. So where should we be looking? Now, please understand, before I mention any of these companies, I am not invested in them myself. I probably would be more interested, but currently my strategy has been to add on to a lot of the larger positions I already have, such as, we've talked about this, Chainlink, AVAX, Litecoin, Bitcoin. So that's where any investable money I have is going right now. So none of this, anything you've heard, as always, is not financial advice. I am not licensed to give you financial advice. This podcast is for entertainment purposes only. Do your own research and own your own results. But in the real world asset space, there is one particular company that seems to be head and shoulders above just about everybody else in the space right now. Can anybody tell me who that is? If you said Ondo, give yourself a gold star. Now, in terms of what Ondo actually does, Ondo is not a blockchain. We are already 20-something minutes into this podcast. I'm not going to tell you everything about Ondo. That might be its own episode in the future as well. But you need to be looking at them because they have taken an early lead and a big one with some very, very key partnerships. Now, it's a bit unusual for large institutions to partner with something or with a company who hasn't been around a long time. But this has happened here, which says a lot. Now, if you remember, we had an episode a while back talking about all of the partnerships with major Web 2 companies. A lot of these blockchains have already solidified. If anybody's interested, you can go to your podcast player or go to YouTube and go to the search bar and type in partnerships. I think the episode should pop up. But these are the things that are going on behind the scenes that most people don't talk about. So it's really important that you're aware of them because, as I just illustrated, having a partnership with somebody like MasterCard is probably more significant than having like every citizen in Egypt on board with you. Like it's that big of a deal. And let's go ahead and take a quick look at the partnerships Ondo already has. Oh, 2 companies we've already talked about that are huge, gigantic companies. BlackRock, MasterCard, let's go down, Franklin Templeton, WisdomTree, Coinbase, PayPal, Google Cloud. Like, that's not only a big deal, this is going to be also really tough for any smaller upstart companies to come in and take any chunk out of what Ondo has already done. If you've already landed these partnerships, and in some cases, things are already happening inside of these partnerships, that's a really good lead to have. We always talked about when investing in blockchains, you want best of breed because they're already established. And even though Ondo's younger in this particular space, they are the established company. There's already people out there I know saying, well, they're the first. I don't want to invest in the first. I don't want to invest in AOL.com. You should have invested in AOL.com. They had a 5 to 8 year run to where they were the biggest game in town and made a ton of money. Like, what are you talking about? How many of these large crypto projects in these blockchains are going to be around in 20 years? Who knows? But it won't matter because by then we will have made our money. And the cool thing is, some of them probably will be around in 20 years. And imagine getting in early to those. Don't sit there and tell me this isn't worth doing. Now, for what it's worth, Ondo topped out at about $2. It is currently sitting right around 84 cents. And if I have already not done a good job illustrating to you just how big the real-world asset tokenized finance market is going to be able to invest in, even if it's a little bit, a major player already in this market who knows what the future is going to be, but who is at least set up better than anybody else to be the leading player in this market. You're going to sit there and say, nah, and wait? Okay. That makes one of us. Now, for those of you who I am ashamed to say listen to this podcast, but are a bit more of a degen, deep value type investor, that's fine. But we have a major sweet divergence alert going on in the real-world asset space right now. And I would be remiss if I didn't at least alert you to it. Sweet divergence, if you don't understand or don't know, is a term we've kind of coined on this podcast to where price drops a lot, but for no real good reason. And as Rick Rule said, if you have a great company and it is all of a sudden trading at half the value, then it has arithmetically become twice as attractive than it was before. Now, this company did do something wrong and lost, it's like 1/12 of the value it was not even a few weeks ago. But what they did was not a systemic failure like you would see in like something like Terra Luna, for example. And this is going to be a company called Mantra, ticker symbol OM. The major culprit here was a bunch of dumping, and to this day, we still don't know exactly where the dumping has come from. People have their suspicions. CoffeeZilla interviewed the CEO, who, unlike, if this really was a type of scam, like a serious scam, usually the CEO just kind of becomes very scarce and disappears. But this guy got in front of it and said, hey, look, this was not what we intended at all. He has burned like the entire team tokens as a symbol of good faith for investors going forward. And we really don't know whose fault or how much of that fault, this whole situation lies with. I'm sure there's absolutely some fault on the founder's end. And that big token dump, which had already cost investors a lot of money, has already taken place. It was the old investors that got burned because of this, not the new ones. The new ones, if they want, get to come in cheap. But again, it wasn't systemic. Mantra is still doing all of the things it could do before. Mantra is an actual blockchain that focuses more on RWAs. Again, I'm not going to get super into them, but we have seen crypto companies in the past get beyond these PR shocks and this level of dumping in the past. It's not super probable, but it does happen. So if you're looking for another company who has really done a lot to establish themselves in this space for the last few years, and it didn't happen by accident, and you want to take the risk and get them at a super discounted price, this opportunity is out there. Again, this is not a recommendation. I'm not buying it myself. Nothing you hear is investment advice. I simply tell you what I am doing, and I will not be buying Mantra myself because this is too far along the risk curve for me. But if somebody wanted to take a chance on it, at least you're not buying a collapsing company, I don't think. Structurally, the company itself may be in the exact same place it was a month ago. You're just getting it at a crazy discount. Maybe. I don't really know. I've just told you everything I do know, so do your own research on that. But there are two actual solutions here, finally, at this point, that I want to talk about. One is investing in blockchains themselves for two reasons. One, they are going to play a part, especially the major ones. They already are, and that's a really good thing. Go back to that episode I talked about with the partnerships that a lot of them already have. They're partnering because they're going to take part in the real-world asset end of things. That's why they're partnered right now. These transactions aren't going to run on Ondo. Ondo is not a blockchain. And we know a lot of these blockchains are more established. So even though the upside is still crazy, the downside has been quite mitigated compared to the downside you would see in years past. So this is what we really like. We like safer bets that still give us asymmetrical upside. And so a lot of the blockchains that I have personally in my portfolio, so Ethereum and AVAX and SWI and XRP, are all in a really good position going forward here. And oh, by the way, blockchains don't know the prices of stocks. They don't know the name or the location of this house you just bought on the blockchain. They don't know the seat number of the Knicks tickets you just bought on the blockchain are. They don't even know who the New York Knicks are. So how will all of these blockchains and companies who are being used for the real-world asset ecosystem, how are they even going to know what the hell it is you're investing in? All roads lead to Chainlink. You are going to need an oracle. And at this point, I don't even think anybody could even name the second place oracle in the blockchain space. If you like companies who currently have insurmountable leads on the rest of their competition, you should probably love Chainlink. Like we just talked about with blockchains, there's going to be competition there. Which blockchain is really going to rise to the top? I think a lot of them are going to have their place. But if you want to sit there and pick a winner, it's anybody's guess. To where I think picking a winner in the oracle space, which is absolutely necessary for any of this stuff to even happen, is a much easier guess to make. Agree? I mean, what are we doing here? All right, so we have these options laid out in front of us now. Timing is going to be tough because I think we're, a long ways away. What do? Do you just put these on your watch list and let them sit there for years and watch the price go up as the opportunity runs away from you? How many of us have done that already? I certainly have. What would your portfolio look like right now had you had not sat on your hands and waited for a better opportunity to buy a lot of these things that are out there now? As I said at the top of the show, in a down market, there will always be additional reasons not to buy things. That's what makes it a bottom, is the plebes and the people who are not good at this don't buy. But in all honesty, I have said publicly on this show that if I had to lean one way towards there's a recession coming or there's not a recession coming, I would lean towards, and as we all know, almost everything gets sold off in a recession. So there could be lower prices coming, but there could also not be. I have also called the recession publicly on this show incorrectly and too early. So what the hell do we do with this? What we always do. If there is something you're interested in buying while price is down, you maybe allocate a third of a position to it, or half, whatever you want to do, and save the rest for if price drops further and average down. No, you are never going to get in on the bottom, but as anybody who has ever followed me for any amount of time can tell you, that's not what this game is about. Chasing tops and bottoms is for losers. I knew about Bitcoin back when it was at $2,000. I did not invest in Bitcoin until it was over 4 times that. But I'm still super glad I did it. No regrets. If you're a long-term investor, you understand that with the price that we anticipate these things to be years down the line is going to make exactly when we got into these things in the first place completely irrelevant on a long-term chart. So it's like the same thing I'm doing in the copper market. I am supremely long-term bullish on copper in the next 10 years, but I don't think now is the time where it's really going to have its run. But I also know I could be wrong. I have certainly been wrong in the past. So what do? I make sure I have some exposure now, and I will continue to stack cash until the time comes to really go in even harder. Again, it doesn't feel good to do, but that's exactly how you know you are doing it correctly. If it felt good, everybody would do it. But there's a reason why only a handful of people win at this game. And you have to be willing to do things when they are hard and uncomfortable. And hopefully, if you didn't already know, I have provided you with a good way to approach this. But get excited, contrarians. This is a wonderful time in our financial history for so many reasons. But the number one reason is that we, as I sit here in front of you today, we get to participate in it at a very early stage. And when you're this early, investing in things can be quite scary. I get that. But you just have to make it happen anyway. And just understand that when you do this, you are not being crazy. You are just being early.